Welcome, everyone, and thank you for joining us today. My name is Kylie Lampert. I'm a partner in private business and family advisory at Pitcher Partners Brisbane, and I've had the pleasure of working alongside multi-generational families and business owners for nearly 30 years, 25 years of those with Pitchers. I've seen the full spectrum, navigating client curveballs, tax twists, boardroom tensions, and supporting businesses through succession transitions of leadership and ownership. The diversity of these client experiences has shaped my perspective on leadership, alongside a more concentrated focus with emerging corporates and large family offices across various industry sectors. And today I'm joined by Chris Hanna.
Thanks, Kylie. My name's Chris Hanna, and I'm one of the principals here in our Pitcher Partners Adelaide in the private business and family division also. I have over 20 years experience in the middle market with a focus on advisory work for clients in the professional services space, including legal, medico, and others, and look after a number of high wealth families. I look forward to discussing the latest radar with you all today, and so thank you for joining us.
So, from boardrooms to family businesses, no two journeys are ever alike, and it's a privilege for us to be trusted through these twists and turns to navigate complex financial, commercial, and regulatory challenge with close stakeholder engagement. Now, before we begin today, we would like to remind you all to use the Q&A box for any questions during the webinar, and remind you that we'll be sharing the links to the slides and the recordings of this session next Monday. You would have noticed in the news over recent times that there is a lot going on here in Australia and around the world. Whether the focus is on productivity, inflation, high wages, business import cuts, energy concerns and transition to relying on wind and solar, and not to mention the increasing business insolvencies. Or globally with the US reporting tariffs, which seem to change every week, and the conflicts occurring in the Ukraine and the Middle East. These are all issues that have an impact on the economy and businesses here in Australia. And our latest Business Radar report casts the spotlight on those tasked with leading during these uncertain times. Pitcher Partners Business Radar is all about hearing the voice of the middle market in Australia. And in our effort to capture that voice, we surveyed just under 150 middle market leaders and business owners across Australia to find out how they're navigating leadership in turbulent environments. Hopefully you've had an opportunity to read our latest radar report. However, if you haven't, it is available on our website at www.pitcher.com.au. Leading in uncertain times demands a shift from the traditional command and control business models to a more adaptive, human-centered and responsive leadership approach. As leaders, we all know too well, there is no growth without discomfort, and uncertainty is best managed by anticipating it, not avoiding it. So as we gather for this virtual event, and many of us are physically dispersed, we do want to recognise the various traditional lands on which we do business today. I wish to acknowledge the traditional custodians of the land we work and live on, and pay respect to the past, present and emerging generations. As leaders in our business communities and families, we can reflect on the enduring leadership of the First Nations people who have cared for country, culture and community over 65,000 years. Their leadership is grounded in wisdom, storytelling, sustainability and collective responsibility. Now, before we do our deep dive, we do need to share our quick disclaimer. It is customary in professional services and it's necessary to keep us all on the right side of compliance. Please take a moment to read this. And now the formalities are out of the way. Let's get to the heart of today's topic. I would like to now hand over to Chris to take us through the middle market business confidence and sentiment.
Thanks, Kylie. As with all business radars that have been conducted by Pitcher Partners over the last 5 or 6 years, they've all included a confidence survey. As Kylie mentioned, we've canvassed nearly 150 respondents with the data based in May 2025. The next few slides are largely data driven, but they are based on that national data. And while there is some sort of consistency, there may be some outliers, including Queensland with the upcoming Olympics and maybe a certain level of confidence around that. You can see from the data that since around about February 24, it's been fairly consistent both for future success and current success, with only sort of a 19-point or a 4-point increase or movement over that period of time. What that suggests is that confidence has remained remarkably stable despite challenges. It is lower than the peak in June of 24, but it's still higher than it was 6 years ago. And we probably all know that the last 5 years have certainly thrown up some challenges. Looking at what's causing this confidence shift, we'll now look at the drivers, the confidence across both industry, Australia, and global. So moving on, this slide now reflects what is happening both at industry level, the Australian economy, and global. Now you can see that there was a peak in June 2023 across all measures of those, and there has been a slight downward trend. Now, while that downward trend measured in the small increments across the survey might not mean a lot, over that time there certainly has been a downward trend of confidence in all three measures. But it still is interesting to note that they still are higher than they were in 2019. So this may suggest that business leaders are overall optimistic about both global and local, but continue to have a positive outlook about their own industry, as that consistently sits above the other measures. It's also worth noting that in the last measure since February, there's been a slight uptick in the Australian economy of 24 points and a small uptick in the global economy. Suggests that people's confidence is maybe slightly increasing, although the downward trend is still there. Considering what the drivers are for these changes, also for these confidence measures, we'll now look at the positive and negative drivers of those. You can see through the confidence drivers for both positive and negative that the same 5 factors have remained consistent since February 25 to May 2025, although a different order from 3 to 5. 1 and 2 being increased demand for products and services being a positive factor, and inflation being a negative factor, are still the 2 leading drivers at 1 and 2. The big move has been the slide of technological advancement from 3rd to 5th. Although it has had an uptick in its own measure as a confidence driver, as a collective of both positive and negative, it has had a slide. So it's probably worth considering is that could technology investment help with the shift that has seen a positive uplift in consumer tastes and preferences? If we then look at what the positive factors are, the positive factors for a confidence driver suggest that there's been 40% of recognise that there's an increased demand for their product and service. This suggests that businesses are still busy and customers are there. But 35% recognise that there's a change in customer tastes and preferences. This therefore suggests that we probably need to be nimble in what we do and adjust and adapt to customer change. It's also worth noting that the introduction to this as a positive factor is supply chain changes. Now, some of these changes may have been driven through a necessity of essentially sort of post-COVID changes, but it's also looking at those changes have had a positive influence on confidence. So although the changes may have been forced, the change of your supply has had a positive impact. Through the preparation of today's presentation, Kylie and I had a discussion around ESG and a local manufacturing grant up in Queensland that has led to some businesses moving their supply chain from overseas to local based on those grants. Now, while the overall cost may be slightly more, when you factor in the grant, what may have been more, when you factor in the grants, the cost has been relatively competitive, which a shift in supply chain has made the manufacturing move local, which obviously has other positive impacts, but it also has meant that they've remained competitive with their margins. The last one being labour market conditions. While tech may still be a factor, this still suggests that we still need people. If we move on, looking at some quotes that were gathered through the process, we look at these quotes, and the first one's around about managing supply chain, which is seen as a new positive impact. The other is about focusing on your existing clients and essentially not taking on new ones. And the last one was about conserving some cash and creating a cash buffer. So what do these quotes tell us? What it tells me is that we all need to take some action, but there's not one size fits all approach. Businesses need to do something to get comfort, and that comfort will lead to confidence. In terms of negative factors, if we then look at the negative factors that we've come across, we can see that throughout the business survey, we can see that 4 out of 5 of those confidence measures are all cost factors: inflation, increased operating costs, increased labor costs, and labor worker shortages driving wages. So while they're 4 out of 5 are cost factors, the one that's jumped in, while not a direct cost factor, certainly can be costly. We're seeing that the change in government regulation is leading to not just red tape, but green tape for environmental, yellow tape for safety, and red tape for the government factors. Now, there was a quote that we found through the research that suggests that the cost of compliance has never been higher than it is right now. So it's interesting to note that the shift in the change in government regulation, while at 22%, at the previous measure was only 11. So while not still the leading factor of negative confidence, it has doubled in its position within the market. So it'll be interesting to see what the next confidence measure suggests or tells us about where government regulation is. Middle market leaders feel that their government is essentially ignoring the concerns of the business community. So it might be worth considering how we approach that and what can be done to sort of remove some of the green, red, or yellow tape so that we can get on with business a little bit easier. That's where the confidence measures sit from the recent radar. Now, Kylie will cover off on some of the factors around turbulent times and leadership during those times. Thanks.
Thanks, Chris. Well, often in stable or steady times, leadership focus is on managing performance. However, in turbulent times, leaders need to manage with trust, energy, and change. So, for the purposes of this webinar, how are we defining turbulent times? Well, as leaders, we would all have very different thresholds of turbulence that we absorb, adapt, and lead through effectively before performance, decision-making, and well-being is impacted. For the purposes of our webinar, I'm defining turbulence to be where external disruption, say a supply chain disruption, meets internal pressures. For example, a cultural leadership transition. Now, these moments arrive unpredictably and they demand adaptive decision-making. They are usually marked by instability, uncertainty, and accelerated change. For leaders to thrive through complexity, change, and challenges, leaders of today need to deliver on presence, purpose, and progress. Trust is that currency that sustains teams and stakeholders to navigate these challenges. I have clients investing in AI, and whilst they may not know how the regulations will evolve, they still need to be prepared to navigate the future ahead and not be left behind. The ability to reaffirm the mission, motivate teams, and anchor decision-making to the core values is the clarity our people and customers need, evolving at a very fast pace. In our research, modern leadership traits are sort of showing that we require adaptive thinking, strategic foresight, clear values, inclusive collaboration, and courage and resilience. However, where our leaders are struggling is perhaps over control or disengagement with a lack of buy-in to share a vision. It might be change management and incentivizing accountability in our people, lack of clarity or presence, or simply misalignment of values and behavior. So I think there are 5 key observed focus areas to raise turbulence thresholds in our leadership teams. First of all, self-awareness. Also, clarity of purpose, a leader's why. Delegation and empowerment, scenario planning, and having an adaptive team culture. So bombardment is overwhelming our clients, and often it has been regulation driven. So headlines like these is forcing leadership to be redefined by uncertainty, whether it's AI, geopolitics, ESG, or talent shifts. Trust, adaptability, and clarity are now more important than control or charisma. Core leadership traits these days are relying on building resilience and alignment. Structured management change reduces resistance, fear, and uncertainty, and it builds leadership credibility and cultural alignment. It's actually the bridge between strategy and results. Our leaders of today, we know we can't predict everything, but we accept that we need to make decisions with full clarity. The reality of uncertainty means accepting unpredictability is now just a part of doing business. Leaders of today need to build on strategic confidence with agility to adapt. It is not avoiding uncertainty, but it's being prepared to respond to it. So, what does great leadership look like today? Aligning with your values, no ego, and being engaged, curious, and inclusive. Being courageous enough to adapt and humble enough to listen and understand impact. Being committed to developing others and coaching, not just performing and instructing. Most of all, leadership requires presence, clarity in communication, and composure under pressure. Integrity of word and action is essential. Without a doubt, there is information overload and background noise, not to mention a competing digital ecosystem for attention. So, how do we define moderate uncertainty? Well, I would put it down to a blend of a few factors that are not enough to trigger panic, but enough to cause hesitation. 83% of those that we surveyed indicated moderate to no change in uncertainty levels. Strategic decision making rather than reactive decision making is becoming the focus, and proactive investment despite external pressures. Yet of interest is 17% had high to extreme change in uncertainty, along with 68% indicating a moderate change in uncertainty. So despite media and uncertain times, our clients seem to be taking it in their stride and are equally cautious. What is certain is that there will be ongoing uncertainty, and middle market will continue to take it in their stride and just keep on keeping on. Perhaps it is the entrepreneurial spirit and the level of grit and determination, but credibility is built in those moments when it is hardest to lead. So if I reflect on what my clients are currently feeling as the constant undercurrent, it would be all those things that we've previously touched on: interest rate speculation, inflation trends, housing market sensitivity, the slowdown in our trading partners, the trade tension, currency fluctuations, political divergence. Change in political parties has been a really big one in Queensland. We only need to look at the state of our hospitals and infrastructure projects. Shipping route disruption and lead time, and localised weather events, which most of Australia has experienced. People will look to leaders who will innovate, and they don't expect leaders to have all the answers, but clear, authentic communication is what will build trust. So I guess, where does presence, being present, and values go wrong? Well, for leaders, it'll be when there's chopping and changing of minds, but there is a need to tread cautiously. It's where there might be scripted behaviour or dominating or silencing others. It's where values are misused and there's a disconnection from purpose. So independence really matters with decision-making frameworks, but it also requires leadership teams to invest in educating themselves. Revisiting best practices with board terms, I think, is a really important thing to do at the moment. Whether you have 3-year terms and a maximum of 9 to 12 years, whether you're staggering terms for continuity, but having flexible terms for transformation expertise during uncertain times is really important. We've certainly noticed an increase, and this is just an observation, in terms of the demand for advisory and leadership support. So it's a normal part of our everyday as professional services advisors to receive or requests for referrals, connections to independent chairs, accessing professional networks and experts, and developing our business coaches for what the actual needs are. So what is driving uncertainty? Well, the media attention that we've touched on, it doesn't really equate to the middle market impact. Only 29% of the respondents of our respondents exported to the US. So they're really watching the brief rather than preparing for a panicked response. Consistent with what Chris touched on earlier, inflation and cost of doing business is really what's weighing market leaders down. So while some are impacted by tariffs, many are actually absorbing the impact, doubling down on value, and delivering to promote customer loyalty, protect their market position and long-term growth. Often it's actually cheaper to absorb the cost rather than disrupt pricing and contracts. It's a trade-off between margin and market share. Protecting all those things that are IP around your brand to increase customer loyalty and strengthening relationships is where the middle market's moving. Where interest rates are driving uncertainty, look, it's triggering revisiting and reinvigorating new banking relationships. Private credit is emerging as a strong asset class to support the middle market. And where the labour market has been impacted, this is triggering disruption. Traditional models are being disrupted with AI and other opportunities to gain efficiency. Leveraging remote workers offshore is also supporting the resource shortages. I think it's essential to explore AI to modernise your business practices and to manage reporting to deal with regulation now, which is the norm. So every industry feels like inflation is different, but there is a common thread, and that's this uncertainty. So inflation and tariffs are forcing a focus on efficiency and productivity. The focus of the middle market cash flow management compared to the growth at all costs and a smart-paced investing in automation and tech is really where we're noticing people are focusing their time. Smart businesses are responding by becoming more agile, risk-aware, and keeping a close eye on customer behaviour and cost disciplines. Without consistent positive cash flow and strong financial disciplines, a business cannot pay its bills, invest in growth, and survive these unexpected shocks. The middle market continue to double down on those basics, which talks to a lot of these comments. 56% are really focused on strong cash flow. Some of these results are 54% maintaining excellent, good track records and having a real focus on your balance sheet. Using AI and revisiting dashboards to recut the data to have real-time information and accessing these smart data and trends is critical with scenario planning. Review the value of your brand and differentiation of your product through sustainable practices. I think this is what will help us to manage the costs. So how is the middle market reacting to uncertainty? Well, they're actually doing it with what we would consider calm leadership. And we can see this by looking at business posture. 87% are staying the course and proactively investing. 32%, or actually 35%, are proactive and investing in growth. 52% are just saying that they're staying the course. And there's only about 13% that are defensive and cautious. Now, whilst it may appear that middle market leaders are calm and perhaps overly optimistic, this shouldn't be mistaken for head in the sand naivety. They are watching carefully and they're ready to act when needed, focusing on fundamentals like strong customer relationships, resilient supply chains, trusted advisors, and capable teams. Calm leadership is critical to steering the ship through these uncharted waters, and it's being enabled with the support of AI. Strong business posture is working hand in hand with very healthy risk appetites. In recent years, the focus may have been on staff, for example, but middle market are investing much more heavily in coaching and leadership teams, and that's considered to be critical. I think communication strategy has never been as critical as what it is at the moment, given the fast-paced change with AI and technology. It's all about humanizing the use of AI. Aligning communication cadence with organizational pace is critical. Encouraging that psychological safety, welcoming the challenge and the debate. Use of technology, the use of board portals, secure messaging, supporting documentation and collaboration, and tailoring style to your board dynamics. Some boards thrive with more formality, others with less. But there is definitely a strong uptick in AI adoption to support calm leadership and manage information flow, often enabling robust risk assessment. In terms of an enhanced risk appetite, we're sitting at about 78%. Leaders are managing this, we think, with AI. There is real-time risk monitoring. AI systems can detect financial, operational, or reputational risks by analysing internal and external data in real time. With regulatory compliance, AI tools can assist in monitoring compliance with evolving laws, especially in highly regulated industries. In terms of strategic decision support, the middle market is leveraging AI for scenario modelling and forecasting. It's a true enabler to evaluate risks and opportunities at a faster pace. Trend analysis. Boards can use AI to track emerging trends, market shifts, consumer behaviour, competitor actions that inform the longer-term strategy. And in terms of ethics, sustainability, ESG and oversight, ESG tracking is using AI to help aggregate and evaluate these ESG metrics across operations, supply chains and portfolios. So what is giving our market leaders the confidence and resilience to navigate this environment? It does seem to be it is their existing strong cash flows, the robust balance sheets, as well as previous track records. And, we've seen that recently with COVID. Another key is to ensure the businesses continue to retain key talent, which has helped protect the business's special sources, we put it, and key relationships, and also accessing reliable information is improving overall decision making. Our survey results indicated 38% are adapting to changing customer needs. So featured in this radar are also action points which will assist you in discussions with your clients. An example of this is in the section where a clear communication strategy is an action point. Communication has often been treated as a soft skill in the past, where actually it's an incredibly important core leadership competency. Communicating clearly, having a clear and comprehensive communication strategy with transparent and honest communication will build trust and be that competitive advantage. I think that there is a lack of strategic communication skills, but our leaders are focusing on having a strong execution and vision. Our clients are still struggling a little bit with dealing with their boards, listening deeply, adapting to their audience, and telling that compelling story. Often speed and thoughtfulness will play a part in this. Reactive communication can backfire and cause confusion. I mean, we all feel that pressure to respond immediately in a 24/7 news and social media cycle. But speed can also undermine clarity, accuracy, and tone, especially in a crisis. I think fragmented channels and remote work puts us at a greater risk of disconnection for both customers and employees. Teams are often working across various remote platforms, leading to inconsistent messaging, and lack of face-to-face interaction makes tone and intent a little harder to read. I think we might hand over now to Chris. I've done enough of the talking so far. Over to you, Chris.
Thanks, Kylie. You've done a great job. If we now look at our business model transformation and what businesses might be doing in terms of the business model they're operating under, we can see that 35% have had no change. And that's not to say that they haven't actioned and had a look at things. I think what's happening is businesses are making valued decisions and informed decisions. And with that, they've got some level of confidence that what they're doing is the right thing. It probably is worthwhile considering, no matter what your current stance or status is have you considered, is your current business structure the right model for your business, or does it need a refresh? We can see from that process that 40% of businesses have actually accelerated what change they wanted to make. Now, that might be off the back of the confidence, where we're seeing confidence isn't, while it's on a downward trend, isn't necessarily falling. People in business still have the confidence to either remain doing what they're doing or actively change and make positive changes. Only 4% of businesses have stopped what they were doing, and only 19 have delayed. Now, those 19 may have delayed for various reasons, but they haven't necessarily put a complete stop on it, where the largest group, through the business model transformation, the largest group have actually accelerated, which I think aligns that businesses are quite confident in the current market and that they are potentially going about things the right way and making informed decisions. It also suggests that businesses are continually looking for the competitive edge, and uncertain times often present with opportunity. It's not necessarily the uncertain times are all negative. The uncertain times can provide for opportunity in some sectors. Now, looking at our strategic actions, you can see here that everyone in business, obviously the easiest thing to do is to cut costs, and that's the first one you go to. Now, cutting costs, if you look at the top two, one is cutting costs and one is considering expansion into new markets. Obviously, expanding into new markets would drive to a greater cost at times, and we might think that those are in contradiction. While they might seem in contradiction, I think it's important to note that both a cautious and ambitious approach is achievable. The cautious approach is cutting costs, and the ambitious approach is to taking on new markets. Often it can be seen and often should be communicated that the cutting of costs is allowing the expansion into markets. It's not necessarily that they are completely competing activities, but it's about having a structured approach and being opportunistic for what might present. It's the other action for leaders to take there is just lead with clarity and intent, invest in people and relationships, and don't be complacent. It's very important to note that the clarity that comes with informed information to then make informed decisions allows for you to do those activities that then allow you to expand into those new markets, or the third leading factor about introducing new products and services. Well, I think now if we take, not sort of finalizing, but if we look at the actions that can be taken, Radar discovered that they came up with 6 action points that will cover off on things that can be done. The first one being a balance of cutting cost and against growth. And obviously they were the top 2 that I just spoke about on the previous slide. And while they seem in contradiction, as I mentioned, they're not necessarily. It's about refining your operations or looking at your supply chains in terms of building efficiency and continuing to invest in innovation. And it's about communicating that with your staff and your workforce, that by cutting cost, you're not going backwards, you're cutting cost for reasons that allow you to then grow. The second action point was one that Kylie.
Yeah, look, I think strengthening your network, we cannot underestimate the power of connection being a clear differentiator doing business. Professional networks are helping us as individuals and businesses to learn, grow, and stay relevant, but also unlock opportunities. In today's fast-paced world, it's not so much who you know that matters as much as it's not so much what you know, but it's who you know that matters to develop those leadership capabilities. And I think gaining perspective from networks requires vulnerability to create that deeper connection. Investing in corporate partnerships as opposed to corporate sponsorships is something that we're seeing as an emerging trend. And relationships, the really good relationships in business, they're the ones that are the gift that will just keep on giving. So in rolling with that whole relationship theme, having a really strong relationship and prioritizing your people, protecting that level of human capital is key. And it starts with having a truly present leadership team. A shift from a, know-it-all to a learn-it-all. Innovation and resilience will flourish where people feel valued and heard. So, building resilience in teams will help that bounce back occur where a setback may be experienced. Not all owners are leaders, and I think we need to be really conscious of those quiet leaders who have significant influence. That's where the focus needs to be. Playing to strengths and encouraging people to step up and participate and get involved.
The fourth action point, in terms of making decisions based on strategy and not fear, does suggest that it's about a structured approach. If we look at the previous slide that we spoke to, where 40% had accelerated their change and 37% had no change, it's about that action being based on strategy and a considered approach rather than just fear of what might happen. And I think that also reflects back earlier on the confidence slides that talk about the level of confidence that people have at the moment not being sort of diminishing too far. It is about not being in a fearful state, but a strategic. And I think that having a really structured approach to that by strengthening your network and prioritizing people is going to allow for greater decision making. The fifth action point talks about building a buffer. Now, whether that's a financial buffer or having diverse supply chains, also different customer bases, different service lines or revenue streams, it's essentially having a cash reserve available. It's having a plan B, a plan C, and a plan D, so that if plan A fails, we're not stuck with that's all we've got. So I think and once again, I think that reflects on the ability to have a strategic approach rather than just having a what comes next and see what happens approach. The idea of having a buffer of cash is saving for the rainy day. A plan B or C means that you've thought about what might happen should your plan A not work. And I think that level of strategic approach will allow for the comfort to exist. The sixth point in terms of automation gives the edge. There's certainly been a shift that we're seeing in the shift to automation and AI. Even particularly in our own business here, we're taking those steps to automate as much as we can possibly. Also look at AI, how it can improve our business process. And what we are seeing is that there's been a shift in conversations we're having with clients. Business leaders business leaders have had time to understand and appreciate AI-powered businesses as an alternative to necessarily more people. We certainly still need people, but we need people that understand AI. Now, automation isn't going to do it for us. It will hopefully make us more efficient and allow us to sort of take that advantage edge. That sort of does come to the end of our action points.
Yeah, I think, Chris, what we should probably do is that we have a little bit of time now to answer some questions. So if you haven't already submitted, please do so.
Okay, thank you. We've had a question come through. So are business leaders becoming better at filtering noise, or are they potentially estimating risks? I might jump in with that one, Kylie. I think what we're seeing is that business leaders are taking advantage of strategic approach. They've also, there's an echo, sorry. Yeah. We're also seeing that it's earned confidence, I think is the term that we might use. Over the last few years, there's been some turbulent times, and I suppose there always is going to be turbulent times, but the last 5 or 6 have certainly thrown up some challenges. And business leaders are becoming better at filtering the noise and also building confidence in what they're doing and the approach they're taking. I'm not sure that it's underestimating risks, but more so assessing those risks and looking at how you can take advantage of opportunities as they present. So I think having things in place, like I mentioned before, for a plan B or C, business leaders are putting themselves in a position that allows them to filter the noise, but also take advantage of risks and not necessarily underestimate them.
Okay, so I've had one that's come through. Can I share some examples of fear-based decisions that we've seen businesses make, and how could they have perhaps approached them differently? This is a great question. Look, some of the patterns we've seen is where there's been across-the-board cost cutting. So instead of strategic optimization, some businesses just turn around and slash everything. And focusing cuts on non-core activities might be impacting, for example, relationship building and other opportunities. Perhaps a better approach is thinking about market differentiation. Some other examples that we've had is where there's been a freeze on all strategic initiatives. You know, the 23% who have stopped or delayed business model changes might do it out of fear or lack of education. Perhaps a better approach might be to assess each initiative individually, and then it just may change prioritization as opposed to slicing it all down. Another one that we often see is defensive pricing, racing to the bottom on price when a competitor emerges. I mean, I think focusing again on that value differentiation is more important. I recently had a client who is transforming the traditional law firms, and they're using AI to do that. And rather than sort of rubbing up against the competitive firms, they're leaning in and offering that solution and building up a relationship to be a service provider to the traditional law firm. I think another fear-based decision that can often cause what we call procrastination paralysis is hoarding cash without purpose. So look, it's great to build up these cash reserves, but it does stop business from investing. Perhaps a better approach is to build those buffers while maintaining that level of strategic investment.
Okay, we've had another question come through. What specific steps can be taken to strengthen supply chain relationships? I think what we can do here, you can see that there's been a supply chain change has jumped from 12% to 27% as a positive factor. And I suppose what we're seeing there is that businesses are now managing their supply chain maybe greater or better than they were before, and that is driving their confidence. Now, what steps can you take to do that? You can diversify your supply chain, so not being limited to one supply chain or one supplier of a particular component. Obviously, some diversification means you're not hamstrung if they get into turbulent times or if their pricing changes to be unfavorable for margin. Review your contracts so that your contracts can be optimized to best suit your business and where you're at the time in terms of where you can get to. It's also about looking at relationships and making sure that we're maintaining relationships within supply chain, both with those that you actively use at the moment and those that you might use in the future. And I suppose another point that we can look at is the increase in technological advancement. We're seeing that have a positive impact on people's confidence and the way that we're doing business, and obviously taking advantage of technological shifts will allow you to strengthen your supply chain. And I suppose the other risk that we face from a supply chain is geographical. So making sure that we're not in only dealing with those that might potentially suffer from some geographical or geopolitical concerns. So making sure that we've got options available from a supply chain. Looks like we've got another question come through, a final question. How do we balance cost reduction and growth investments without sending mixed messages to your team? I'll finish with that one, Kylie. I think looking at I sort of did touch on it during the presentation around, I think it revolves around clear communication, that cutting costs isn't necessarily that the business is going backwards. I think if we communicate with our staff and our teams that we're cutting costs so that we can then expand into different markets or use those resources to further develop either product or division or region or whatever the growth aspiration is, having a cost saving measure that allows you to do that, I think isn't necessarily a mixed message. It's about having that sort of both cautious and ambitious approach. And I think communication with your teams, both senior and those on the ground about what's happening, I think that would sort of go a long way to not sending a mixed message. It's not that we're cutting costs and making redundancies, it's that we are cutting costs that allow us to expand into different markets. And I think, like with most things, the key is around communication and making sure we're communicating that with all levels across our business.
Well, thanks, Chris. Look, I'd like to thank everybody for your questions and your time today. We'll be sharing a recording of this webinar along with slides from our presentation on Monday. We have actually got a number of questions that had still started coming through. We're going to actually use those to provide some thought leadership insight papers as well. So anyone who we did not get to your question, please know that we will be addressing that directly. If you have any other questions that you'd like to discuss from today's session, please reach out to your usual Pitcher Partner contact. And for more information and staying up to date with everything about Pitcher Partners, jump onto our website. So it's been a pleasure hosting with you today, Chris. And yeah, I'd like to thank everyone for their attendance, taking time out of your busy day. Thank you.
Perfect. Thank you. And thank you to you, Kylie. Thanks very much.